Hey traders, Parker here with another indicator. Actually, the finished version of my range indicator. This is the CW Parker Range Finder Indicator 2.0. I named it 2.0 just because of the last one I had created. I wasn't satisfied with, but I finally finished this one, and I just wanted to go ahead and debut it. You can look in the link in the description, and you can get the indicator from there. If you haven't already, please like, subscribe. And if you have any comments or questions or anything, leave me in the comment section. I'll get back to you. For the most part, the indicator finds different ranges, and this the top of the range. Just like I said, range top, range bottom, range mid. These clouds represents Fibonacci levels. So this would be the 78.6. This would be 61.8. This would be 50, 38.2, and this is my personal one, the 2140. 2140 field. So the indicator finds different ranges. So you can find a stock that's breaking. It's basically a breakout indicator. So you can find. I have it set for 12. So some of the features of this indicator are the length. You can set the length. You can set the percent of bars are within the range for to actually create the range. And this percentage is going to be based off this length right here. There's a feature on here that you can hide the past ranges, and you can see right there those purple lines indicate the past ranges. Dash purple lines represent the past ranges, high and low. You can hide the fields. So right now I have the Fibonacci levels hidden, and those are just the lines that go along with the clouds. For me, sometimes those lines can be cumbersome, so I just usually have them hidden, and I use the clouds instead. And you can change those Fibonacci levels how you see fit. You can hide the range bubbles, show bubbles high, low, and mid, and that's basically those bubbles. There's another feature of the actual range bubbles. So this range between the 21.4 field is $6.90. The one between 21.40 and 38.6 is 38.2 is going to be $5.42, and you can't see this one. So between the 50 and the 61.8, no, the between 50 and 38.2 is going to be $3.81. Between 50 and 61.8 is $3.81. This is balanced, and this is balanced as well. This is the 78.6 field. Between the 61 and the 78.6 field, and that's where you get the 542, and then you have your 690 right here, and that's where you get your. This is why I said it's balanced. So 61, $6.96 and $6.90 up here as well. So those are the features of the indicator. I'm going to cut those bubbles off, and you can, if you don't find this cloud useful and you actually just want the ranges, you can cut the clouds off as well. So usually when I create my indicators, I try and make them fully customizable for anyone to use them or make changes how you see fit. So I'm going to leave the past ranges on, and you can see right here this range was created from this high and this low, and you can see right here actually broke through, and that's where you get this purple arrow right here showing there's a breach. These ranges are going to stay in place unless they're broken by the max or the minimum of the candle body, and basically the higher the body or the lower the body will have to break it. And this right here, the lower the body of the candle broke it. You'll see sometimes you have highs that break above here, but the body of the candle does not break it. For me, that range is still in play. And let me find one where I had a high break or a low break below it. It's one on here. You'll find that out that like this one right here. Well, no, that's not one. But there'll be highs and lows that breach the range, high and low. But if the body of the candle here is something right here. So these candles right here, they breach the high of the candle right here. And this candle right here actually broke above it, or is this candle, the body actually broke above it, even though it didn't give you a signal. But for the most part, these past highs right here, they didn't break above the range. and the range stayed in place until this candle right here. And you can see right here, actually the body of the candle actually either equaling or is breaking the actual top of the range. And you'll find that's out with the low as well. So that's how I made this indicator. I want the body of the candle to actually breach the top of the range or the low of the range, for to invalidate the range or make the range go away. And that's basically what you're seeing right here. And what we're looking at right now is the S&P futures, E-mini S&P 500 futures. So the different ranges or the different field levels, you would just range. I mean, that you would use them as your risk levels. So you can see right here when the S&P 500. Let me cut off the past ranges. So you can see right here, you got a breakdown here. You can look right here at this long low wick where buyers are coming in. So if you want the risk, you can say if I got in on the 78.6, 21.4 fib right here, my risk would be the lower part of this right here. So I'm not sure how much that is. It's probably a couple dollars or cents. But for the most part, you risk off of here and use this as your out. And you'll try and capture the whole move. If not the whole move, you'll try and catch the next fib. So 21.4, 21.4, 38.2, and then you have your 50, 61.8. And you would have been this would have been a nice trade right here. If you got in right here and you caught this push up right here. So you'd have made your money off of here. And then right there, once you did get the breach, you could have stayed in it. And for the most part, it created this next range that's using this low right here and this range high. And pretty much the S&P 500 or the futures basically just stayed within here the whole entire day. And this is what they called when the stock is just ranging, or you really not getting a whole lot of volatility out of the stock. And if you're an options trader, then this would be perfect for you. And you'll just trade off of the highs and lows of the range, or the midpoint, in this case, of the range. And you could possibly see all these lows right here and all this activity going on in the middle of this range right here. So we can go to another day. This was today's range. So we can go to yesterday. So this is Thursday. And you can see right here, you had this nice push off from the open, and it found this range here and this range here. I mean, this high and this low right here is using for your range. You can see right here, it low volume pushed down below as soon as the market opened up. You had this nice two deviations worth of volume right here push up, and then it hit the range. It couldn't break above. You can see all the bodies just sitting there. And then you finally had this breach above, and then it created this next range off of this low. And you can see how the stock price just broke down and just continued downward from there. And you can see here's your breach down, another breach down. Even though you had like, you call this a hammer candle. You had to just start trying to reverse from that level, but it couldn't. And it finally broke down, and then it was just ranging between there. So the reason why I use 12 is 12 bars on a 5-minute chart. It's an hour, and I'm using 25% of that, so that's 3 bars. So that's 15 minutes. So that's 1/4 of the time limit or time frame amount of bars I'm using for to help me create these ranges. And you can see right here, this is the same situation. There was a sell-off. The price consolidated, and you can see 2 times deviation. That's what this yellow bar represents, or yellow volume bar. It's two deviations above volume, and this is a huge sell-off. And you can say right here, you could call this a candle, but I mean hammer candle. But you can see the increase in volume, even though it broke down from here, and then you got this immediate push up. Even though it's showing that it's light volume, but for the most part, the stock came back up. You probably want to use this indicator in conjunction with another indicator, but for the most part, it's using these candles to create these ranges, and then from there, you can either play the range or you can use it as a base level for you to find your risk levels. So if you were to risk this break right here, you'll probably do a 2% stop loss or a 5% stop loss somewhere in this area. Or you can actually use the actual fib level as your stop loss. And I wanted to show that day to where this day right here where the S&P 500 just spewed all the way out. And you can see right here, here's the breach up. It came back into the range, pushed back above, but it found this range right here. And that's basically what this indicator does. It works on all time frames. This is what the weekly is. So on the 5-minute chart, like I said before, I'm using a 12. My length is 12. That's an hourly range. I'm using 20. I'm looking for 25% of those bars to be within this high and the low of my range, and that's what creates the range. So, and it's 25% of 12 is just 3 bars. So you're looking for 3 bars. So on my weekly, I'm using 13. I'm using 25% of that. The reason why I'm using 13 is because there's 252 days that the stock market is actually open. So you divide that by 5. Basic stock market is open 5 days a week. So that gives you 50 times 0.25. And 50 gives you a year. There's 52 weeks in a year. But if you want to look at it from the trading point of view, there's 50 point whatever. And I'm using a quarter of that. So a quarter of a year is basically 3 months. So it says 12.6, so I just round it up to 13. So here I'm using quarter ranges or quarterly ranges. So this represents somewhere like three months worth of information. And because I'm using 13, it's using 3. I believe that's 3. Correctly, 13.25. So 3.25, but you could roughly say 3 weeks. So on here, it looks for 3 weeks worth of data. 3 months worth of data, but it's looking for 3 bars. So 3 weeks to be within the range of the high and the low, and then it creates a range from there. And this is the S&P 500, and you can see right here, it came right up to this last area right here, or this previous range. And it's pulling back. It's not, you can look at it as a point of resistance, and I'm not sure exactly where it's going to come back to, but you looking at this low, this last week's candle right here, possibility for this stock to come back to, or the actual range high here. So we don't know how much a pullback is going to be, but that's it right there. But for the most part, you're seeing a lot of volume. And that's what this indicator does, is finds these ranges. And you can find a situation here with this is when the pandemic happened. This is when the pandemic happened, so you can look right from there. And you can see there's huge sell-off, and then you get this huge buying candle right here. And then you get this push back above. You can see right here, this past range right here started having some trouble, but actually breached above that, and then from there, the stock took off. And you can see right here, they usually say the stock is either consolidating or it's trending. And you can see right here, for the most part, that it's basically the stock was just trending up to find another area of consolidation. And that's what it looks like on a weekly. And we can go to the daily as well. Right now on a daily, I usually use 20, and it's 25% of 20 is just 5 bars. So this is the ranges that it finds on a daily. And you can see right here, the stock is not doing anything. It's just basically consolidating. Yeah, it's going down, but for the most part, It's consolidating here between the range top and the previous range high and the Fibonacci level, and then you finally got this breakout where stock was trending up, and it found these other areas according to the pullbacks, and then you had this area right here pushed back above, and this is basically what it looks like on a daily. And these breaks or these breaches are actually scannable as well. So if you want to look at it on a quarter level, you just change to 63. The reason why it's 63, when you look back at 252 times it by 25, you get 63, and that's roughly 3 months right there. Or you can actually just use 60, and you basically getting the same picture that you got off of the weekly. So I would look at it on a daily. You can look at it like this, or you can look at it on a monthly level, basically 20, and play your ranges like that on a daily. And I will mark out my areas of support and resistance, especially using these past ranges. You can look right here when the stock market stopped going up or is pulling back or going into a correction. It pulled all the way back to this previous high right here, or this previous range high, and bounce, and it finally broke down below on this candle, and now it hit this Fibonacci level, possibly a push back above or attempt to push back above. On the hourly, I use this on the hourly as well. I use the hourly of 32. 32 is basically 4 times 8 gives you 32. And I've had pretty good experience using 32, but you can use 8 if you wanted to look for more so scalping, I should say. So if you want to change this to actually change this to actually 8, you can do that as well, and you're gonna get a different ranges for those. But it's faster ranges, and if you're a quicker trader or you're a faster trader, you can actually push this all the way down to 4. And that's one of the other things that I wanted to show you as well. This thing is really helpful. So if I wanted to look at it basically on a 15-minute one, I could push this all the way down to 3. It's gonna show me a lot more ranges, but it's looking for 3 bars, or it's looking for actually possibly 2 bars, but for the most part, it helps you find these little small 15-minute ranges, especially if I'm scalping. I use it like that, especially you're playing this range like this. It stayed in this area of consolidation and finally broke down below. Then you had this push up, so you can use on many whatever your length, but I like to use on in conjunction with time. So that's why I said 12, and usually I leave it at 12. But if you wanted to, you could increase the amount of bars that are actually required for the range. You could say 12 bars within the 12 bars needs to be within a period high and low. And this is the type of range that you get. But normally I wouldn't use it like this, but it's effective in its own way. And if you want to look at it from the point of view of 50 would be 50% of 12 would be 6, so it would be 30 minutes, and 75, and then you got 100. So that's the gist of the actual indicator. The scanner works the same. There's an actual scan for this. So the scan is this range, scan 2.0 rangefinder. And basically this is a scan that right now I have the parameter set for a million volume, and I'm looking at things on a breakup. I'm looking for a breakup above the range. I'm looking for it to be true within 1 bar. And this is basically what it came up with. And Mullen, we can go look at that, but basically it's this huge candle. I mean, breakup above. I'm not interested now. EVLV will be a better stock to go look at. EVLV. You can see it completely broke out, and you can see from, I think I passed it up. This is the hourly right here. Used on the 8, you would have got the signal at 8 a.m. that this stock broke above, and you could have rode it from there. So that's the scanner part, and we can go look at this. Here's your weekly. It's breaking out on the quarterly or the weekly as well. You would have got this one right here. Notified on this one right here. You can see all this stock is doing just range and consolidating, and it finally broke out over here. And you've been running the scan or run the scan every day or run the scan on a weekly, you would be able to catch this move right here and possibly catch this further up move, at least up to $8. Where did it go today? So we're looking at $8, roughly $8 or 78, 70 something dollars, 70 something, $7 or something. But for the most part, that's it right there. This stock still has the potential to go up a little higher, especially if you're looking at it from the point of view of the weekly. Your next resistance level would be right here, and you just mark these out like that. And we can mark these out, and then we can come back and check it on the daily. Excuse me. Check it on the daily. And if you were scanning on a daily and you had your set of 20, you could have got in at $3.82. And you can see right here's all this ranging. And here's your breach right here. And it broke above. And you got these false breakouts where the stock is just, body of the stocks are trying to break out, but nothing really panned out for this move right here. And you got this move right here, but you got immediate rejection. So that's one of the reasons why I like to look at things on a weekly. And this is where we're coming back to the hourly, and this is just VWAP. So the other thing about this indicator, or the other feature of this indicator, is the watch list. So this is your watch list right here. So range finder, and it's just telling you it's complex, may experience greater load times. But the watch list works like this. One, you get a breakout. Two, you get a one is a breakout. Two is the body of the candle, or the max of the candle being above the range top. 3 is anything that's between the range top and the mid of the range, is light green. And 4 is anything that's below the range mid but greater than the range bottom. And you'll get a bright red here if the close or the minimum of the candle is below the range bottom. And that's basically how you will filter out your day's stocks. So this is my close greater than, so it's not giving me any red. So, but if I go down here, it should give me something crazy. So here's your red. That's number 5, and you get a 6 is the actual breakdown in the stock, and you don't have any ones on here. But that's will be a way you will filter out your stocks like that. You'll be able to filter out your stocks. So I'm going to go back to my regular, this one here. Well, for the most part, this will be the your watch list column right here. And usually I have this on pre-market, or I'm looking at this pre-market because I'm trying to catch some moves before the market open. That's you'll find a lot of stocks do a lot of moving before the stock open on low volume, and then once the actual stock open up, the stock goes nowhere. So I've had that happen a few times, especially if it had this huge move up and then it broke down below. But for the most part, that's the indicator. Those are the different functions of the indicator. I'm trying to think of different time frames best to use this on, or different links. So if you're looking at the weekly, you can actually push this to the 50. I'm not going to leave it on this stock because it's not enough data for the indicator to pull from, but we actually go to the S&P 500. We can look at it from this standpoint. If we want to look at it, how many years I had 10 years on a weekly. And we wanted to look at it on a yearly basis. I put it in 50, and you could basically say from here, this was a high. Once it found 63 bars within there, we're looking at this on 25%. 13 bars, because we're looking on a weekly, and we put it on a 50 and 25%. So we look at it from that point right there. You can see right here it created this range, and it created another range here, and it's actually using the range here from this your highest high and this low right here, and it's basically showing you how the stocks move within this range between this high and this low. And it's probably your 52-week high and your 52-week low. And the stock is, the indicator is actually using those ranges. So if I'm using this, I'm either going to use on the 50, the 13, or possibly the 3 to 7 weeks. 3 to 7 right here. I usually leave mine at 25%, but you can change that as well to whatever you length you find or bars you're looking for within the range. So we'll put this back to 13, so it's showing the quarterly. And that's basically the indicator. So with this indicator, you get the scanner, you get the actual indicator, and you get the watch list column. And that's pretty much the end of the video. This is the my indicator. I'm calling it the rangefinder indicator, and it's basically the 2.0. If you want the indicator, just look at the link on the bottom of the link in the description, and please feel free to leave me some comments or like and subscribe. If you haven't already, leave me some type of feedback from any from the information or the indicators. But remember, I'm not a financial advisor. This is just some I'm sharing with you some information I learned from the stock market and some of the different strategies that I've learned also. And one of the things is when you get into trading, people talk about the ranges, and you want to find those range breaks, and you'll see that either stock is consolidating or it's range or trending. So either stock is consolidating like this right here, you can see the consolidation right here, or it's trending, and you can see how the S&P 500 is trending up. We can actually go to Tesla and see what it's doing as well on the weekly. Add some drawings on here. And you can see right here, Tesla broke above on this week, and it's retesting this range right here. So we can go and look at it on a daily. And this is what Tesla's doing. It's at the bottom of this range right here, so you can risk off of this range, and maybe 5 or 10% below the range. If it did, I wouldn't necessarily use this as my stop loss right here, but you could use this previous Fibonacci level right here as your stop loss, or somewhere along there, but maybe 2% or 5% stop loss right there. If you believe that Tesla's going to go back up. And you can see right here, if we zoom out, how it found this range right here, broke down, and you can say it's trending up, and then once it hit the range, it pulled back a little bit, then finally broke above. So one of the stocks that I know I debuted this stock on was AMC, and this is AMC, and this was the move before the push up to $72. And I know I got in somewhere around, my initial getting in the stock was like $10 or something, and I rode it up to 25. If you go to this day, I think it's this day right here, you can actually see where doing pre-market actually pushed up to 25. And you can see right here, this is where this stock, it ranged a little bit here, and then from there it actually broke above, and then from there it broke down, and it finally breached below this low right here. And this is what it's been doing. It's just trading within this range. And we go to it on a daily. It's just trading within this range. Not really doing anything. And dang, you had this huge drop off here. I don't know what happened here. But for the most part, ape conversion approved by court bears. Whatever's going on with AMC, don't look bullish. Whatever's happened here, because it completely just dropped off. And right now it's using this range, and it's basically sitting at this 21.4 field right there. And you can see it's just been trading within this range right here for the past couple of days. Ever since it's made this range, you don't have any breaches below this low or this high until today, when it broke above and basically collapsed from there. And that's another reason why I like this indicator. I really appreciate creating this indicator, because you can see when on this 5-minute or this hourly range, nothing's going on. It's just the stock is just ranging between those, and you can actually just base your trading off of that range. And what's another stock? Another stock that's been in the news. I'm trying to think of one real quick. So we can go look at Apple. Yeah. This is what Apple did today. You can see the same range block right here that Apple broke above. And it basically did the same thing as the futures did. S&P 500 futures did. Basically trade within this range all day. And this is what it's doing on a daily, on a 20 bar, and using 5% of that range. It's actually came down to this previous range right here. So that's interesting for Apple. It stopped right here, or paused right here from this low right here. And we go look at it on a weekly. It breached above here. What is this, March? Breached above. And you could have went long on this one. And basically it's doing a pullback and it's waiting to create another range. But it's actually finding support along this previous range right here, or previous high of this range. So possible pullback. I don't think to 157, but a possible pullback all the way back down there, because it's breaching this previous range high right here. So that'll be something to look for on Apple. And what was another one? Nvidia. It's finally pulling back some. And I had these lines on Nvidia, and that's just where I marked out where it finally broke out. Who would believe Nvidia came all the way down to 108 or 107, 108.13, and then you can see where it consolidated a little bit within the range, and it finally got this breakout, paused at this range high right here, and broke out, and now it's doing this pullback right here in the month of August. And let's go to the daily. Where's that 108? Here's the 108 right here, or 107 possibly. And you can see how the stock just hit these previous ranges, paused, came back down, consolidated, and trending, consolidated, trending, consolidated, trending, consolidated. And now you can say it's possibly going to pull all the way back here to the 401 level. That's what it's saying for this range bottom right here. and we go back to the weekly. So that's what we're looking at on NVIDIA. And this is what it did on a daily today anyway. This pullback broke down. You got the breach right here. Try to push back up, back into it. Broke down further, and it's basically just been consolidating within this range. So we'll go to the back to the ES. And one of the other stocks I was looking at, PLTR, Palantir. I played this stock, and this is what Palantir did today. It was kind of whipsawing back and forth. If I put the time reminders on it, you can see. But for the most part, this will be 5, 10, 15, 20. So 25 minutes. Then it finally made its decision to break out. And this was Palantir's been doing on a daily. You could have been in it here at $10. I was in it around here at $11, but I sold too early because I didn't think it was going to continue on. But it actually did. And that was before I created this range indicator. But for the most part, you can see it right there. Consolidate, pull back to this 61.8 field right here. And then push back above and then finally hit $20. Right now it's just pulling back. But this is going to be the end of the video. I appreciate you guys taking the time out to listen to what I had to say. And like I said, if you haven't already, please like, subscribe for notifications about new videos, especially when I'm giving away different indicators as well. You'll be the first one notified. I appreciate you guys. I wish you the best. Stay safe out there, and God bless.